Hong Kong housing prices are showing signs of recovery with a 0.6% rise in the latest property price index. But can this small uptick really drive home more home sales? Hi, I'm Bobo and welcome back to our weekly recap of Hong Kong real estate. Today we'll be covering the property price index, which has ended its downward trend, and whether it can sustain growth to break out of its current slump. Second, we'll discuss High Park 2's launch of 90 new flats and evaluate how strong buyer demand is during the current off-season. Third, we'll analyze the rental market, where rental yields remain high, and explore how much return buyers can expect from renting out properties bought at premium prices. The October Property Price Index, published by the Rating and Valuation Department, stands at 290.1 points, up 0.6% month-on-month. This marks the first increase after 5 consecutive months of decline, offering a glimmer of hope for the sluggish housing market. However, the numbers reveal a more complicated situation. The index remains near 8-year lows and is even lower than August's 292.1 points. Over the first 10 months of 2024, property prices have fallen by 6.8%. Compared to the market's peak in September of 2021, prices have dropped by nearly 27%. The current state of residential transactions highlights subdued market sentiment with no clear signs of improvement. So recovering from this low point may remain a challenge. Recent transactions paint a sobering picture. In Mount Shan, a mid-floor unit in Sunshine City's Block J with a saleable area of 519 square feet and a 3-bedroom layout sold for 6.2 million Hong Kong dollars at around 11,900 Hong Kong dollars per square foot. The original owner bought the flat in November of 2009 for 6.4 million Hong Kong dollars. After holding the property for 15 years, the sale represents a 2% loss with a paper loss of 200,000 Hong Kong dollars. The nano flat market saw even greater losses. A studio flat in Aspen Crest in Wong Tai Sin, located on a mid-high floor measuring 198 square feet, sold for 2.3 million Hong Kong dollars at around 11,600 Hong Kong dollars per square foot, setting a record low for the estate. The original owner bought the flat 9 years ago for 3.41 million Hong Kong dollars, and the unit has since dropped in value by 40%, resulting in a paper loss of 1.31 million Hong Kong dollars. Meanwhile, the broader market trends reflect a shift toward more affordable homes. The drop in home prices has led to an increase in transactions involving mid to low price properties. As of November 25th, 88.5% of all second-hand residential transactions involved homes priced at 10 million Hong Kong dollars or below, the highest proportion since 2016. Even luxury homes have not been spared, with steep price cuts required to close deals. One notable example is a series of mortgagee sales at the Arch in Kowloon Station. 3 years ago, the original owner listed 5 units at 1.3 billion Hong Kong dollars with a price per square foot of 160,000 Hong Kong dollars. The properties recently sold for 410 million Hong Kong dollars, reflecting a 70% price reduction. At the time, the units drew significant attention due to their extravagant Chinese palace-style design. By mid-2024, the properties were valued at 600 million Hong Kong dollars during a tender, but eventually sold for 410 million, which translates to 45,000 Hong Kong dollars per square foot, far below the original asking price. Next, both the first and second-hand housing markets remain relatively quiet. Developers are taking advantage of this lull to launch projects at lower prices, but are there any real bargains to be found? Asia Standard recently released 90 additional units in its High Park 2 project in Hung Shui Q. These units, all located in Block 6, range from about 300 to 500 square feet in size. The average price per square foot is 10,380 Hong Kong dollars, $100 lower than the previous price list, similar to the original price levels. Discounted prices range between $3.458 million and $5.987 million. According to Asia Standard Executive Director Phileas Kwan, the first batch of 81 units launched last Saturday saw around 62 units sold, making up nearly 80% of the available stock. However, despite being promoted as a low-price launch, the sales momentum has been lukewarm, so it's likely the developer will require additional time to clear the remaining inventory. In contrast, the rental market remains robust, with demand extending even to high-priced rentals. According to the Rating and Valuation Department, the October Private Residential Rental Index saw a slight dip of 0.3% month-on-month to 194.9. Despite this minor decline, rents have risen by about 4.8% year-to-date, continuing to outperform the sales market. One notable high-priced rental transaction comes from Novum East in Quarry Bay. A mid to high-floor studio unit measuring around 200 square feet in size was leased for 14,300 Hong Kong dollars per month, setting a record high rent of 65 Hong Kong dollars per square foot. The unit's owner bought the flat in January of 2018 during the peak of the property market for around $5.429 million. Based on the current rent, the unit's gross rental yield is about 3.2%. Meanwhile, the latest data from the Deposit Protection Board shows that Hong Kong residents believe they need an average of 1.03 million Hong Kong dollars in savings to feel financially secure, while a comfortable retirement requires at least 5.45 million Hong Kong dollars. Amid the current uncertain market conditions, many are adopting a more cautious approach to managing their finances, focusing on building a robust savings buffer for emergencies. This conservative strategy is seen as providing greater peace of mind compared to purchasing property or pursuing high-risk investments. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.